Banks pre-2008 originated about 60% of loans and serviced about 95% of them. Banks originate now about 35% of loans and service only about 45%.
The Weekly Friedman, your source for the most essential information in the default industry. With your host, Adam Friedman.
Federal Reserve Vice Chair for Supervision, Michelle Bowman, made an assertion in her recent remarks regarding whether current capital rules are discouraging banks from participating in mortgage origination and servicing. Now, under the existing framework, MSRs are subject to certain capital deductions and risk weight allocation. That treatment makes servicing capital intensive and might not align with the actual risk profile of MSRs. Post-financial crisis regulatory policy, including heightened capital treatment that Michelle Bowman describes as overcalibrated, contributed to the migration of mortgage servicing from banks to non-bank institutions. Joining me to discuss this topic is Friedman Vartolo Marketing and Communication Manager, Burcu Eroglu. Burcu, how's it going?
Good to be back. How are you?
Doing good. Thanks for joining me today. This is a very pertinent and also a big topic.
Definitely.
Can you give us a quick history lesson on where does the MSR capital treatment even come from and how is it used today?
So in order to do that, I think we need to take a bit of a step back and do like a history lesson on Basel III. Basel III is a regulatory global framework that established minimum capital requirements and also leverage and liquidity requirements for banks following 2008. The capital treatment of MSRs in a Basel III framework is twofold. Number one, MSRs were given a hefty risk allocation. And number two, banks that held a certain number of MSRs that exceeded a certain percentage of capital, that was called a deduction threshold, and they received a disproportionately higher risk weight.
What does she mean when she says that MSR capital treatment may be over-calibrated?
Tying this into Bowman's remarks, her comments might signal an underlying tone here, which implies that regardless of whether this risk allocation back in 2008 on MSRs was intentional or not, it might be overcalibrated now. And while Bowman notes that these changes to capital treatment were sound at the time, she notes the difficulty in calculating MSR valuations because a lot of it is speculative. I mean, we don't know if a borrower is going to default. We don't know that likelihood per se. Banks pre-2008 originated about 60% of loans and serviced about 95% of them. And in 2023, banks originate about 35% of loans and service only about 45%.
But is the idea here to change the treatment of MSRs or change the capital requirements?
Bowman outlines a path forward in two ways. Number one is she's saying that even if we keep the same risk weight for MSRs, maybe we should consider getting rid of this concept of a deduction threshold, as I mentioned earlier. The second proposal that Bowman sets forth addresses whether the current risk weight applied to MSRs accurately reflects their actual risk. She questions whether the existing framework is overly uniform and suggests that MSR risk might be better evaluated at a more granular level, taking into account characteristics of underlying mortgages such as LTV. I think comparing and contrasting the landscape before 2008 might be beneficial in determining what the national housing environment may look like in the future. For example, before 2008, foreclosure almost anywhere in the country took about a year or maybe less. In a post-2008 world, we're seeing entities having to navigate through Dodd-Frank, CFPB, Fannie and Freddie requirements, HUD requirements. I mean, the list really goes on. The question might be more involved because it might also require first answering whether these big banks even want to really re-enter this space. So that is where the big highlight comes from.
This is interesting. You gave us a lot of information. I gather this is something we're not done with, right? Like we're kind of almost at the beginning. Is that how you feel?
I think so. She makes in her remarks that there's going to be additional steps forward, but I think it's also worth noting Federal Reserve can't act on its own. Basel III is a framework that's implemented through three institutions in the U.S., Federal Reserve, the FDIC, and the OCC. The OCC being the Office of the Comptroller of Currency.
Burcu, thank you. Very informative. I gather we'll come back here when there's more information to report.
Sure.
Thank you. Thanks for joining Burcu Eroglu and I on the Weekly Friedman, your source for the most essential information in the default industry. Thanks for tuning in and looking forward to seeing you next time.